What is Bitcoin? Origin, uses, advantages, and risks. Bitcoin is the first cryptocurrency to emerge. It is a decentralized digital currency that enables a new payment system and digital asset. Although it is increasingly used, many users are still unaware of its purpose and what its advantages and risks are. What is Bitcoin? According to the official Bitcoin project website, this cryptocurrency is a consensus network that enables a new payment system and a completely digital currency. It is the first decentralized peer-to-peer payment network powered by its users without a central authority or intermediaries. Bitcoin is the first cryptocurrency to emerge in 2009, and since then, its use and relevance have increased exponentially, although its use is still limited by the perception of insecurity and the lack of knowledge among many potential users. Bitcoin is a digital, non-physical currency that only exists on the blockchain that supports it. As a currency, it can be used for everything that any other state-backed currency, such as the euro or the dollar, can be used for. However, Bitcoin does not depend on any government entity to issue or back it. Instead, it is the users themselves who manage and maintain the operation and security of Bitcoin. Therefore, it is possible to make purchases, sales, and transactions with this currency from anywhere quickly, without conditions or limitations of any kind. But, in addition to being a currency, Bitcoin is a digital system, since, as mentioned, it is the first existing blockchain. This technology is an encrypted database where any information can be stored. Its importance lies in the fact that each recorded piece of data is marked with a unique digital fingerprint, making it unrepeatable and immutable. To differentiate these two concepts of Bitcoin, when referring to money itself, the cryptocurrency is usually referred to as Bitcoin in lowercase. However, when referring to the protocol or system that supports it, Bitcoin is usually written in capital letters. From a user perspective, Bitcoin is an application that provides a personal Bitcoin wallet and allows the user to perform transactions with this currency or digital asset. However, from a more technical level, the Bitcoin network consists of a digital public ledger, blockchain, which records all transactions and legitimizes the authenticity of each transaction, making them public so that users themselves, without intermediaries, maintain control over the movement and value of assets, preventing manipulation. Furthermore, there is a high level of anonymity, which varies depending on how the user created their own wallet and how and from where they received the cryptocurrencies. What is the origin of Bitcoin? Bitcoin was born in November 2008, when a person or group of people under the pseudonym Satoshi Nakamoto sent a message to an email about cryptography, describing a project to create a digital currency that would be used to record and transfer value. As Nakamoto himself stated when this cryptocurrency emerged, Bitcoin was born with lofty ambitions to provide citizens with a means of payment that enables rapid, low-cost transfers of value, and that, furthermore, cannot be controlled or manipulated by governments, central banks, or financial institutions. In January 2009, the first network based on the Bitcoin protocol went live, marking the origin of cryptocurrencies. Starting in 2011, some organizations began accepting donations in Bitcoins, and online merchants began accepting these currencies as payment. From that moment on, its growth was unstoppable. However, over the years, more new cryptocurrencies have emerged, competing with Bitcoin and causing its value to fluctuate constantly. What are the uses of Bitcoin? To use Bitcoins, the first thing you must have is a device on which you can install an electronic wallet and, of course, own these cryptocurrencies. This electronic wallet can be held by a cryptocurrency exchange or trading site, where you can buy, store, and sell your cryptocurrencies. This would be very similar to a bank account where you store your money. The interesting thing about cryptocurrencies is that you can also create an electronic wallet yourself, whether digital or physical, or purchase it from a company that offers it. The most famous physical wallet is Ledger. Although its use is not yet widespread and many people are unfamiliar with how this system actually works, the truth is that more and more places support Bitcoin transactions. Many online stores, such as Microsoft, Dell, Expedia, and G2A, allow and facilitate the use of Bitcoins. Other stores, such as Amazon, iTunes, Starbucks, and eBay, allow you to obtain gift cards by purchasing them with Bitcoins. Additionally, In some online games and other online services, it is possible to make payments or receive money in Bitcoins. However, although the use of these currencies is more common in the digital world, there are also, and increasingly, numerous physical stores that allow transactions with Bitcoins. In fact, there are applications that function as maps to find these physical businesses around the world. For example, the CoinMap application has registered more than 356 businesses of all types worldwide that accept Bitcoin payments: restaurants, auto repair shops, art galleries, computer stores, travel agencies, clothing stores, clinics, etc. Furthermore, more and more countries are accepting and advocating for the use of Bitcoins. The best-known case is El Salvador, which passed a law to make Bitcoin legal tender alongside the US dollar, requiring all businesses and merchants to accept it and giving away Bitcoins to its entire population. Furthermore, although the use of cryptocurrencies is legal in the vast majority of countries, many are beginning to regulate their use and possession, with the goal of protecting users, businesses, and investors. In short, among the most notable uses of Bitcoin, the following are worth mentioning: paying using Bitcoin cryptocurrencies, earning interest on the Bitcoins you own, obtaining a loan using your Bitcoins as collateral, hedging your financial exposure with derivatives on regulated markets, obtaining investment returns by buying and selling Bitcoins, as this is an asset that theoretically tends to appreciate in value under constant demand. Advantages and risks of Bitcoin. Below, we outline some of the most significant advantages that Bitcoin offers. Greater liquidity compared to other currencies and cryptocurrencies. Increasingly widespread acceptance as a payment method. Easier international transactions than with regular currencies. Typically lower transaction fees. Anonymity and privacy compared to traditional currencies. Independence from creators and political actors. Inherent scarcity. However, Bitcoin also has some disadvantages that should be considered. Exposure to Bitcoin-specific fraud and scams. Black market activity could harm its reputation and usefulness. Susceptibility to high price volatility. No returns or refunds. Possibility of being substituted with a superior cryptocurrency. Environmental damage from Bitcoin mining. Thank you for watching the video. I appreciate your like to continue growing. See you soon.